Welcome back, everybody, to the Thursday evening financial thing weekly live stream. Let me adjust this. Look at that. Hope everybody is having a great week during the summer. What is it, August now? We're motoring through August, and we've got a lot to cover tonight. As usual, here every Thursday evening, UK 7:30 p.m. time, US 2:30 p.m. Eastern Standard Time. 5 hours behind our brethren in London, but we got a lot to cover tonight. We're talking about some peer-to-peer news, money thing administration, assets capital announcing profits. And we're going to be talking about Ethereum today. We've seen, for anybody that follows cryptocurrency, Ethereum, some big changes this week to Ethereum, and hence we're seeing this big price jump. At least that's what I believe the big price jump is from, and some general cryptocurrency moving this week. And we talk a little bit about what's going on in the economy, and take a look at the Trading 212 portfolio. So that's pretty much it. Go ahead and just hit the thumbs up if you can for me to start the stream off. And you'll notice that down here at the bottom of the screen, I've actually created a Patreon page for financial things. So if you've ever considered wanting to support the channel, as you know, I've been doing this for a while. And now if you decide you want to do that, you can go to that link at the bottom, bit.ly/Patreon FT. So any support you want to give to the channel helps me out immensely. You can also support the channel by going to the Financial Thing website and using the cashback links or any of the affiliate links on the website. That helps out immensely. I definitely appreciate that. And it feels weird to me even, saying things like pushing the channel forward with support like that, because it's always been something that I wanted to give to you for, out of my love for doing this and giving information. But, unfortunately, it comes running a business. You do have to look at things like revenue generation, and, there are expenses to pay that come along with doing this. So if you decide you want to do that, as uncomfortable as it makes me feel, please feel free. No obligation. Of course, I will continue to do this as long as I'm breathing and able to bring you the information. I will continue to do that for you. What's coming up in the future? Yes, I've had a really good conversation with Louis Schwartz, CEO of LoanPad, this week, who assured me that he will be joining us on the live stream, I would say within the next month to 6 weeks. He just had a new baby. So I think his baby is about 5 weeks old, and hence the reason he's been hesitant to do it. But we are going to really try to work out a time when Louis can come on the live stream and just tell us what's going on at LoanPad. And I've been excited about that for a while. Also, we're going to have a guest who I find particularly interesting, Andrew Holgate, who was one of the co-founders at Assets Capital. He did leave Assets Capital a while ago, but he's going to be coming on the stream I think September. And then we've got Andrew Adcock, who is with Crowd of Angels, or Crowd for Angels, and they are crowdfunding for businesses. So we got some good guests coming up, and I'll continue to try to get as many interesting guests as I can. Plan on doing one guest a month at this point and go from there. So again, Kuflink is a sponsor of this channel and a Financial Thing in general, being very generous. So I always want to give them a shout out as a sponsor of this channel. So if you haven't invested in Kuflink, please go ahead and give them a try. Definitely in my top 5. They got a good influx of new loans and peer-to-peer lending. They seem to be handling the loans well. You can get up to £4,000 cash back as a new investor. So you can go to that link right there, join.kuflink.com/financial-thing, or go to the Financial Thing website, go to the cashback link at the top of the page on the menu, and then you can find that link there too. And again, thank you so much to Narinda, and Kuflink for their continued support of this channel, which I do have to have. So let's do a quick shout out. Where's my chat comments here? Hold on 1 second. Hang on, finish. Don't want to hit that button, that would be bad. That's the end button. Where is my chat? Hang on, here we go. Who we got here? First and foremost, Alan Toombs here from a very damp Basingstoke. We got Paul Bagworth in Kenilworth, Colin Perry in the Peak District. Robert Pates is here in viewing from Greece. Very nice. Not a bad place to be viewing. Steve Manton from Solihull. Dan Barber in Hayfield in Derbyshire. Philip Waters in a very wet Milton Keynes. Aki Chap, of course, in Accrington. Paul New in Stockport. Peter Vince from Leatherhead. Debbie of Mixed Media Arts, who I always want to call Mixed Martial Arts because it's so similar to MMA, from the Grand Cayman Islands in the Caribbean. Keith Morrison, Lincoln. Carful from Essex. John Day, Nottingham. Mark Mason is here. Mike Powell from Southampton. And Stephen Haling, Nottingham. Brian from Woburn. And Alan Stratford from a very, very wet Melbourne. It seems to be a consistently wet weather report from the UK, as always. It's a very British summer, so I understand. Again, if you hit that thumbs up for me, very much appreciated. And let's crack right into what's going on in the news this week. Let me go ahead and pull up the here we go. There we are. Perfect. Okay. Let me just zoom in just a tad here. So Crowd Property has been raising money, smashes their target of £800,000, and they've managed to raise themselves a very healthy £1.8 million in equity fundraising round through Cedars. So they got 793 investors to pony up £1.8 million, and now they've raised £3.9 million in equity capital, following the £1.1 million that they raised in March of 2019, going back to also 2017. Of course, you know, I've always said this about Cedars shares. I'm always a little hesitant. It's not something I recommend. Personally, I'm not into it. I'm just not. I think a lot of Cedars companies that, you know, float on there are probably not, you're just not going to get your money back. Not saying Crowd Property is one of those, but it's a very risky long-term play, I believe, for various different issues with liquidity. And a lot of these companies, you know, not necessarily Crowd Property again, but some of them are running in the red. And when a company is running in the red, you're basically at the mercy of the liquidity on the Cedars platform. If that for some reason dries up, you're going to get stuck with those shares, and you're maybe not going to be able to sell them. I have seen a lot of Cedars shares go up quite a lot, but I've also seen a lot of shares that have done absolutely nothing, have not moved at all, and who've gone actually in the negative red. So there is a risk involved if you're thinking about investing in these company shares. It's not like investing in publicly traded companies on the stock market, a lot different. But Crowd Property has done a good job. They've managed to raise £1.8 million, so good job to them. LendingWorks warns of a short-term rise in loss rates. Yeah, LendingWorks I've really been very cautious about. They used to be one of my favorite peer-to-peer lending companies until obviously the stuff that they've been through with COVID has really changed my view of them, the way they handle things, and quite honestly, I've been withdrawing money when it comes from capital and interest, and I just have this gut feeling that things may not be very strong over there, and they're talking about these rising of short-term loss rates, and I think that we haven't really seen the fallout of lending losses as far as default rates go when it comes to consumer lending yet. There's still just a ton of government stimulus out there, and I think when maybe that fallout comes, a company like LendingWorks' loan book is really going to suffer. So just pay attention to what's going on in the general economy, and again, I'm keeping my eye on LendingWorks, but they do say that their short-term loss rates are going to be a little bit higher than expected. So we'll keep an eye on them. Money thing, administration fees revised up to £728,000. Now, again, we talk a lot on the stream about administration and the fees that come along with a peer-to-peer company or any financial company that goes into administration. And, I've read, by the way, if you're a money thing investor, you can go ahead and log into your account right here. You're going to see under general updates in the support menu right here, general updates. You can read all of the joint administrators progress reports. They're not the easiest. Hang on, it's logged me out. This is it? No, this is, where is the report? I thought I had to, hang on one second, let me log in. Let me log in and show you what the report looks like. I think it's good to read these reports. They can be a little bit annoying sometimes to find, but if you go support general updates, down here at the very bottom there is a not very well advertised link that you can go ahead and read the entire report. It's not particularly interesting, but let me see, I already had some things highlighted too on this. Let's see here. So there's a section in here which says about fees. Let me zoom in a little bit. Also has detailed breakdowns on each loan, how they are running into trouble, where the collection is on them. Joint administrators have received claims totaling £932,953 from 7 creditors. So you got unsecured creditor reports in there, investigations, and then here we go down here in the joint administration's fee. So they've a fee estimate summary of £358,872 was the estimate, and now they are revising this fee estimate to, there's two sets, £638,125, so a huge jump in what they think the estimated fees are going to be. And then that's MCL, which is one part of money thing, and then we have another section down here which is MSTL, which is another section of money thing, and as part of the business too, they have a revised fee of up to $90,712, and that represents more than 738,000, close to 739,000 pounds in fees, and that's in this very early stage. So who knows what that fee is going to rise up to. So we got 728,837 pounds. That's what the expected fees are now. And this is the problem with these administrators. They can just really drag things out because things are hourly. These administrators get paid hourly fees, and they're quite expensive. So they do revise those fees upwards from time to time, and they can be quite drastic. So we're seeing almost a doubling from 430,000 up to 728,000 expected administration fees. So yeah, the blows continue when it comes to investors through these failed peer-to-peer companies. It is what it is. Assets Capital has returned to profit despite a challenging year. They made a profit, according to this news story, £2.6 million in its full year, which is the largest annual profit to date. That's a very good thing to see Assets Capital in the black as far as the profits they're making in a company. We always want to see peer-to-peer companies making profits. It's a very, very important thing to see. If you ever too, by the way, you want to look at these reports on these companies, you can go to Companies House. If you search on Google Companies House and then put in any of the companies you want to look at. So here's Assets Capital, for instance. And then you can just look in the company filing history. Now, I have not seen these accounts because they're not up here on Companies House, the one that this news story is saying they've, in their company accounts, have made 2.6 million. But you can see down here this was filed in January 2021, the group of companies accounts right here. So if you wanted to actually look at Assets Capital's financial situation, you would just click on that, and then this would give you the breakdown right here of all their entire company accounts. And again, I'm no accountant, but I do like to look at these profit and loss statements for the peer-to-peer companies because I want to know how much money they're losing or making, especially if I'm invested through them. But you can see here it said 2020, the loss for the year. As you zoom in a little bit closer for you, you can see down here the loss for the year. This states £795,802, a comprehensive loss for the year. And that was 2020. It was even bigger in 2019, £1.1 million. So if Assets has been able to make a profit of 2.6 million over the last year ending 31st of March 2021, that's a big deal. I mean, that's essentially wiping out most of those losses from 2020 and 2019, actually all of them, which is a very, very positive thing to see. And I think Assets Capital is going to continue to do well financially because they're on these government CBILS loans that they've been lending to companies that are mostly government backed, and that's a good thing for you as a peer-to-peer lending investor because you want Assets Capital to remain in a profitable state. So that's always what we can hope for. News story: Bank of England pours cold water on hopes of peer-to-peer lending access to term funding scheme. So term funding scheme, again, another government-backed program which is going to provide funding to medium and small enterprises. But they have said no to peer-to-peer lending companies having access to this, and have said no, this is only something that banks and building societies can have access to. So only the very high society in finance gets to have access to this. Probably, I would imagine the government seeing some of these peer-to-peer lending companies go out of business, and since the government does not back any peer-to-peer lending companies through FSCS protection on the money that gets put into those businesses through investments, maybe they're a little bit gun-shy. I actually can't blame them in some ways, but I would also think there are some companies that are very solid who could really benefit from having access to this term funding scheme. But so far they have said no and put the kibosh on that, so peer-to-peer lending companies will not have access to that. We've had again the FCA with this loan marketing ban. FCA very, very hard on what it's proposing for peer-to-peer lending companies being able to advertise loans. So some of the industry is really not taking this well, and the FCA has taken the brunt of those complaints. Not surprising. A lending administrator extends the anti-money laundering deadline as investors are set to receive a whopping £818,000. So what Lendy is trying to do, well, sorry, not Lendy, but the administrator, is just to check the investors' anti-money laundering checks on each investor to make sure that they're not money launderers, and they want to make a distribution payout of 818 grand, but they are not doing that so far because they haven't finished the AMLs. This is again, when I read these Lendy news stories, I always feel a little bit sick because they've got 2.87 million expected to be recovered from loans. 415 grand will go to third-party costs, agents, legal, and auction fees. And Lendy, here we go. This is always the humdinger that gets me. Lendy is contractually entitled to £735,000. So Liam is sitting on his yacht somewhere, and depending on what happens with this lawsuit in the future, which is holding that up at the moment, quite rightly so too, Liam just might get himself a nice big check at the end of the day. So always makes me a little bit sick when I read that, but I have to read it, so it just is what it is. Let's look at, oh, and by the way, the top 5 list, I get emailed a lot, about the peer-to-peer lending top 5 list through Financial Thing. It hasn't changed at all. It's the same as it was 6 months ago. There's no really new peer-to-peer lending companies I'm looking at the moment that have come to market. So I'm sticking with the original companies that we talk about on here. LoanPad, Assets Capital, Kuflink, Crowd Property, and then LendInvest, again, LendInvest is not strictly peer-to-peer lending, but a very solid product offering for investors. And then coming up, I talk about Unbolted, and there are a Blend Network too, who again I don't invest through, but top 5 really has not changed at all. So read this. This is a very important thing to know if you are somebody that goes visiting a financial advisor for your investment advice every year, and they are taking money from you. This story: advisors earned £4.4 billion in revenues from retail investment business last year. Again, £4.4 billion. £4.4 billion. That's a lot of money for receiving advice, for sure. A lot of that advice I don't think is really needed for most people. They can make investing very simple by just buying things like index trackers, but people still seem to want to go with that old school mentality of going to see financial advisors and letting those advisors dump them into things like Neil Woodford, Wonderful Fund, and Fund Smith, and Invesco, and Aviva, and all this stuff, when you're really paying the price for that. So £4.4 billion of your money as a total pool from investors has been paid to these financial advisors. So it's a lot of money. And look at this though, dwarfed by insurance advice, which was raked in £18.6 billion. So if you ever wanted to get into something, you want to make some money, become an insurance advisor, because apparently £18.6 billion for insurance advice, that just blows my mind. If you add those together, over £22 billion, almost £23 billion. It makes me crazy. Look at this. There were 5,017 firms in 2020 offering advice last year. 5,000 of these companies who are offering advice to people who don't know how to invest themselves. So, I was hoping that those numbers would decrease and we'd start to see those investment amounts of money that were paid to advisors start to drop as we can educate people on doing their own investing and really saving money on that. But it hasn't happened quite yet. I want to just touch on this. So obviously cryptocurrency kind of a hot topic at the moment, but there are new loan exchanges coming out onto the market. This one is a crypto loan exchange, secured finance, which has raised about £3 million in seed funding. I'm always a little bit skeptical about, especially if you're buying and selling cryptocurrency, make sure you do it on a platform that's been around for a while. I would not do it on a platform that's not been around for at least a year. And then I always recommend, if you're kind of one of these people that's a little bit nervous, the best thing to do is to get your cryptocurrency onto your own hardware wallet, so it's in your control, just in case anything happens to these crypto platforms, because it has happened before where they have gone out of business or have gotten hacked. Some of the bigger companies have paid a lot of money to people that own crypto. Hacking's become less of a problem now, but there are still some stories about that. And I definitely recommend that you get yourself a hardware wallet. And if you own Bitcoin or whatever it is you own, do research. It's not that difficult to do it. But there are new companies that are coming on into the space. Actually, if we look at Cryptocoin market cap, you can see there's 391 exchanges. You probably can't see that. It's very small. But they have a pretty nifty little graph. Let's see if I can zoom in here. And it shows you which are the biggest platforms as far as trading. Binance is the biggest by far, $22 billion in volume over 24 hours. Coinbase next, $3.6 billion. And then Huobi, $4.7 billion. And that is volume over the last 24 hours. FTX at $2.1 billion. So Binance by far the biggest, but you've seen some problems in the UK with a lot of banks stopping deposits into Binance. But just be careful if you are buying and selling crypto. Stick to these bigger platforms. Be careful with these smaller ones down here that have very low trading volumes, because we just don't know what's going to happen with those platforms and how secure they are. So I recommend, Coinbase, Binance, Kraken is fine, Voyager I think is okay. Don't really know much about this Huobi, but this is a new company that is coming into the space, secured finance. That's going to be crypto lending. Interesting. And then I hear we're talking about the economy. Payment holidays for unsecured loans hit 12-month high in March. Again, this is going to show that people are really struggling at the moment, and a lot of people are taking these payment holidays on unsecured loans, and that goes back to what we were saying about lending works, because they're unsecured lender. That once those payment holiday ends, we're going to see the reality of how strong, the economy, or how weak it is, really come to light. Because once those payment holiday ends, I think you're going to see a lot of people in a lot of trouble, and these loans start to run into trouble. I don't know what that default rate is going to be like. It's very hard to tell because of all this government help that's going on right now. But it really is something to pay attention to. You can see like the unemployment numbers here, and we got to pay attention to these economic things that are going on. Not terrible at the moment, but just a hair under 5%, which we've seen back here between, I think this was December of 2020, it's high of 5.1%. We're seeing the same thing in the USA here. This was the big unemployment spike that we had in April 2020 when COVID really started to hit, and then it's a huge unemployment rate, 14.8%. Then we start to see it drop, but it's still kind of high at 5.9%. We're seeing new statistics of labor coming in about a lot of people filing for unemployment. There is some question as to whether that's because there's a lot of stimulus going on. A lot of people don't want to work because they're receiving more from unemployment than going out to work. But these numbers are still high. I mean, look at where we were down in 2017 in the US, 4%. And the reason why I look at the US, of course, most of you are based in the UK, but the US, again, is a very good barometer of really what's going on with the economy. And it has a lot of tipping effect on the global economy if the US is not doing well. The US stock markets tend to suffer, which has a domino effect. We talk about that every week. But you can see down here the unemployment before COVID was very, very low at 3.5% in January of 2020. It was almost double, a little bit under 50% of that now in June 2021. And I honestly don't think it's getting any better. So really very important to pay attention to that. We'll talk about also with Funding Secure. If you're a Funding Secure investor, you're going to get these loan updates from the administrator that's trying to recover loans. Now, if you're investing in loans that have personal guarantees, some companies like Able Rate, Assets Capital, they have under the securities personal guarantees. And personally, I think personal guarantees are not worth much of anything. And this loan really goes to show this. This was a loan in Asbury property. And you can see here on the 3rd of August, 2021, in the loan update. Let me see if I can zoom this so you can see it. As per previous update, the position remains that the borrower is untraceable, and as such, the loan will now be closed with no funds being returned to investors. So an example here of a loan that was in default, and they did recover some money from this loan. See down here, recovered on a gross sale amount $365,000. Net recovery was $283,000. What that represents right here, 58% of capital. So 42% of the capital was lost on this particular administrated loan, and the buyer or borrower is untraceable. So it means that personal guarantee is worth absolutely zero. So pay attention if you are loaning money on loans that have personal guarantee security, that personal guarantee security is pretty much worth probably nothing. So I just wanted to go ahead and show you that. There's the... Let's go ahead and look at the trading 212 portfolio. I am again sitting in very, very heavy cash at the moment. Still really waiting to see over the next few weeks what the stock market does. Been hanging on to a little bit. The value of the account now at £12,798. So because we're sitting in close to 8,500 in cash, probably not going to see this value move as much as before. But again, up here 16,795 was its high. So we've definitely taken a backtrack forward, and a lot of because of these oil stocks, we've seen them absolutely get creamed. Laredo Petroleum down today $46.98. Let's have a look over the week. We're at over here $58, and I ended up actually buying some more of this stock, thinking I was going to try some swing trading, coming in and out of the stock. That did not turn out well at all, because I think I bought at $58 or $56, and now we're at 46. So now we're just going to go and sit on that Laredo stock, see what happens for a while. Lloyd's is still really not changed at all, still holding strong. And then we're in the red. Microvision, small amount invested, 37% in the red. Olin, that is a small position. That's a chemical and ammunition company in the States, at minus 1.75%. And then Tullow Oil, minus 13.69%. And Centrus Energy, minus 15.66%. So again, the oil play was good. I mean, the oil play got this portfolio really moving from the very early days when it was £5,500. We started, the tech did well. First of all, we were into the tech. Then we moved out of the tech at, I think, was a good time, and then into the oil. And to be honest, I thought the oil stocks were going to do much better, because crude oil has been trading so high at $70 to $75 a barrel, and these oil stocks have just absolutely gotten hammered. I mean, you can see here over the last 3 months, Laredo, from its high where we're at, $95. I mean, we've lost more than half of its value in just 3 months. And again, this is the risk when you buy individual shares in companies. You're seeing it right here. This has happened with my own money. This is not sponsored money. That you are taking a risk that a stock can, halve in value in a very, very short amount of time. And this is why I say index trackers, for people that are not very experienced in buying stocks and shares, go with the index trackers, because it is just going to save you this emotional heartache. Now imagine if you'd have bought in here at this high range, say even at $80 US, right? You'd see it go up. You'd be feeling pretty good, wouldn't you? You go from 80 to 95. But then you're going to see the slide, and when you see the slide, the emotions are going to slide with it, and you're going to be thinking, what the hell do I do now? Maybe I'll just hang on. And then you get this emotional bounce right here from 75 and then back to 80, and you think things are starting to recover, and then look at this mountain. It looks like a mountain, right? At the peak, and then just slide, all the way down here from 80 down to 55. So you've lost $25. That's 55% from here down to here, and your emotions are gonna, I would imagine most people at this point area are gonna start to think about cutting their losses and selling, which is you only lose money when you sell, but you see a little bounce here and then just continue to slide. And I have no idea what this stock's going to do. If I told you that, I had some kind of ESP vision into what these stocks are going to do, it'd be a complete lie, because obviously I don't. If I did, I would have pulled out here at 95 at its very top end, and this account value would have been over £16,700. But because I have no idea what these stocks are going to do, neither do you. Now the portfolio has lost about $4,000, and we're taking a very defensive position, because I really don't have much of a clear view on where these stocks are going to go. In the short term, I think that the economy is in some big trouble in the US, and I think in the UK too. we'll see if that tends to be true or not. We'll do a quick cryptocurrency update. If you have questions or comments, put them in the stream. We'll do it in the chat. We'll do a Q&A at the end. We've had some good movement on crypto recently. Today, up about 3.4% on Bitcoin. The big mover this week is Ethereum. We're going to talk a little bit why that's going on, but Ethereum is crouching back towards that 3,000 US dollar a coin. We're up about 4.6% today, and 7 days we're up about, I think, let's have a look. 7 day, 21% in the last 7 days. And the reason why is Ethereum they've gone through this thing called a hard fork, which is where the coding gets updated on the coin. It's actually called the London hard fork. And you're seeing this run up because I think there's a lot of excitement from investors about Ethereum. And, you know, the one problem with Ethereum at the moment is the fees that are being generated by Ethereum when you make a transaction. This fork is kind of one step in changing Ethereum, which right now is a proof of work coin that will become eventually a proof of stake coin. And a proof of stake means that there'll be a limited supply of coins, and then people will stake the coins instead of mining the coins, which will be a big change for Ethereum. We don't know when this is going to happen, but the London hard fork was one step in the right direction to trying to get a hold on these fees that Ethereum miners are charging to make transactions. A lot of things are running on Ethereum right now. We've got a lot of these NFTs, things like Uniswap. For anybody that doesn't know what that is, if you have a coin and you want to swap it to another coin without having to go through a company like Coinbase or Binance, you can do it through a company like Uniswap. And Uniswap, I'll show you what Uniswap is. This is something that runs on Ethereum. And you can actually just connect a wallet to Uniswap and then change your Ethereum token to whatever you want. So let's say you want to change one Ethereum token to, I don't know, let's pick a coin here. What do I have? Let's say the graph. One coin. So there you go. You can make an exchange from Ethereum to 4,033 graph coins, but you are going to pay a fee to do that. You can see what the fee is right here. The liquidity provider fee is 0.003 Ethereum. You have a price impact, and then a thing called slippage tolerance. So that's the difference between the valuations of the coins as they move. But sometimes these Ethereum fees have been just very, very high. I mean, you could see transactions, say, of $90 to $100 in fees of your Ethereum. And so this hard fork is going to try to really take away some of that, some of those fees, and to make it more consistent, because a lot of the times you just know what the fees are going to be. If you want to read more about the fork and what that means for Ethereum, Coinbase has a really good article about understanding it. They're going to be doing things like burning off coins, which will in the future mean there'll become a smaller supply of Ethereum coins. Right now, see right here, there's 116,983,000 Ethereum coins, and there is no limit. There is no limit on the supply of Ethereum coins right now. So it's a inflationary coin, because when there's no limit, it's kind of like printing US dollars or pounds. You just print more and more and more and more, but eventually that will be capped. And just like Bitcoin is capped at 21 million, Ethereum will be capped. But you can go ahead and go read what this fork does for anybody that's interested. It's going to try to put a more predictable amount on the gas fees, or what Ethereum costs to make a transaction. Some of the miners are obviously upset about that because they're going to make less money. But that is one step in Ethereum's evolution, and that's why we've seen Ethereum jump 5% in 24 hours, 22% in the last 7 days. So if you were a buyer of Ethereum very early on in the early days, and you're going to be very, very happy, but I don't know that many of you are. And by the way, it was very interesting. I found, let's see if I can show you this. I found a screenshot of my very first Ethereum and Bitcoin purchases from 2017, and that was when I first began investing in this stuff, and show you that this is not something I just started doing. It was before I knew any different, before I used Coinbase Pro to buy. I paid way too much in fees, and these are the two transactions right here. You can see my first Ethereum purchase of $100 was on December the 16th, 2017, and here Ethereum was $478 and 91 US cents. So obviously we've seen Ethereum go up a lot since then, and you can see this fee that I paid down here, $2.99. So I paid a $3 fee, a 3% fee, and then here's the first Bitcoin purchase on here on the left, same date. Bitcoin was 17,256 US dollars. So if you've been following Ethereum for a while, you're going to be very happy with these prices, even though we've seen a drop come down from obviously this high point when it was over 4,000 US. But we're seeing this bounce come back, and there's still a lot of people that believe Ethereum is going to be a $5,000 coin by the end of the year. Is that going to happen? I don't really know. I think that eventually it will, absolutely, by the end of the year. Not really so sure. Again, no crystal ball. But you can see Bitcoin is over the $40,000 mark again. I think the important price point for Bitcoin is 42,000. That's the point that it really seems to struggle staying over. So we're coming up to that point again. You can see these low ends right here if you follow kind of what's going on with Bitcoin. I think 42,000 is the resistance point on Bitcoin as we start to see a takeoff on Bitcoin towards that $100,000 mark. And again, if we look at the debt clocks of what's going on in the economy, this is why we need to pay attention to something like Bitcoin. Down here, the UK, 3.6 billion US dollars of national debt, and we're only bringing in $3.2 billion of income, of gross domestic product. So we're seeing this deficit. Not a good thing, but US up here is leading the entire world with its insane money printing. 28.6 trillion. Yeah, 28.6 trillion in national debt, and only the GDP of $22 trillion. So they're minus $6+ trillion every. It's crazy. It's really crazy what's going on with this debt printing. This is why we need to pay attention to things like Bitcoin. There was a news story in. This is the Bloomberg Outlook on cryptos that they publish every month. This was August 2021. I don't always believe everything I read in these reports, but they're saying this could be a discounted bull market. Bitcoin appears to have built a base around $30,000 that's very similar to the $4,000 at the start of 2019 with the movements of the technicals. We see performance parallels that could get the benchmark crypto back on track towards 100K. So they're looking at technicals, things like moving averages and things like that. So everybody seems to be on the same opinion that 100K is going to be the next price point. But again, you should never listen necessarily to these big financial companies, because if we look at JP Morgan, back in May 2027, their CEO, Jamie Dimon, who never seemed to get his thoughts straight about crypto, but he said, buyer beware on cryptocurrencies. This is back, again, let me turn that off. This is back in 2020, May 2021, and then next thing you see, JP Morgan launches an in-house Bitcoin fund for private bank clients. So they're offering a Bitcoin fund to the wealthiest of their clients, while the CEO is saying buyer beware. So again, you know, this is why I say don't go to financial companies for your financial advice, because a lot of times they're flip-flopping. A lot of the times they just don't know where they stand on things. I'll tell you one thing one month and completely flip around the next. Yeah, so that's one of the stories. The IRS, for everybody that's always talking about, oh, Bitcoin's just, you know, all these criminals are using it. Well, the IRS seized $1.2 billion of cryptocurrency this fiscal year. Not really that much when you're considering you're at a 900 and what is the market cap on Bitcoin? 868 billion. So that's what they've seized. But it's a pretty interesting article because it shows you what they do with the crypto when they seize it. They actually auction it off. So CNBC, if you Google this news story, it's pretty cool. IRS has seized 1.2 billion in Bitcoin this year. What else? I think that might be about it. This was interesting too. This is the SEC head. I don't know if you can see this or not because it's a bit off the screen. This is the SEC chairman, Gary Gensler, and he is he used to teach about cryptocurrency. He used to be a professor at a university. So he has said some interesting things about it. I'm just going to play this to you. This was on Twitter. Hopefully you can hear this. See it.
And before starting at the SEC, I was honored, as Anya said, teaching about the intersection of finance and technology at MIT. This included courses in these various topics. And in that work, I came to believe that though there was a lot of hype masquerading as reality in the crypto field, Nakamoto's innovation is real. And some in the public sector would say, well, no, almost like wishing it away. I really do think there's something real about the distributed ledger technology, moving value on the internet.
Yeah, so very interesting because there's always a lot of talk about that crypto is going to get regulated and banned. Is that the case? I don't think so. I don't think that would ever happen in the US. But the SEC chairman saying he believes that Nakamoto, so people who, whether it's either one person or the group of people that created Bitcoin, that they really did create something that is very interesting to look at. And this guy is believed to be very crypto friendly. So it was interesting to see his comments on that and see what his opinions were about this innovation of technology and what it could mean. And you know, also I think that in the future they may adopt it. The SEC may give it the thumbs up. Who knows? Probably not. Probably won't happen. But it is interesting to see him making those types of comments about what's going on with the invention of Bitcoin. Yeah, that's about all I've got for you as far as news this week. How long are we going? 54 minutes. Gosh, the time goes by so fast. Let's see, we'll do a quick Q&A. Hi, Tony in Somerset. Yeah, what did you think about the Propland interview last week? We had Brian Bartaby on here. If you want to watch that interview, it's archived on the Financial Thing YouTube channel. I thought it was a really good interview, and did anybody sign up? What do you think about it? And if you're not subscribed to the channel, please hit that subscribe and hit that little bell to be notified when new videos come out. I got a couple of people saying they're invested with Propland and they're happy. Robert Pate says, let's see, is Kuflink a chatbot on their website instead of a real person? Should we have a look? Let's have a look. I would imagine at this time of night it's probably a chatbot. Where's my chatbot? I'm not even seeing a chatbot come up here, Robert. Where's the chatbot? Contact us, maybe? Oh, here we go. Yeah, that's definitely a bot. That's a Kuflink bot. It's off to the side here. You probably can't see it. Talk to an agent. Well, it looks like you can you can hit the talk to an agent button. I don't think you can see it because it's off screen, but you can talk to an agent by clicking the button. Mate, I don't know what it tells you. Do you have a Kuflink account? Yes, I do. Kuflink bot. What are you going to tell me now? Our live chat is available from 9 a.m. to 5:30 p.m. Monday through Friday. Please refer to our knowledge base. So between 9 and 5, they say they have live chat. Mike says the important point for lenders is they're going to court over the fees Moneything gets from loans, and min fees aren't relevant to lenders as we aren't paying them currently. Okay. Ah, I looked at the wrong company. Okay. Yeah, it's hard for me to see because I can't see the chat when I'm sharing the screen. So thanks for pointing that out. So it's Assets Capital SME. Let's have a look at Assets Capital SME. Filing history, full accounts. Here you go. That's right. See, Mike's always on top of things. I need to have Mike Powell come on here as a guest of the live stream. He's always really on top of his stuff. So yeah, if you want to look at assets as accounts, it's Assets SME Capital. I was looking at the wrong one. There we go. So you can see here, operation profit loss, post exceptionals, 2020 minus 800 grand, 2021 plus 2.4 million, profit loss for the financial year plus 2.6 million, and 2020 minus 500 grand. So big change. That's a big swing. 3.1 million pound swing. So good to see that for them. Good to see that for assets. I just get excited when I see a peer-to-peer company making money because I'm so used to seeing them in the red. Aki says you'll never attract Lawrence's attention when he's on a roll. What's up, ma'am, in London? How are you? Robert, you having trouble logging into your Coinbase app? I don't know why. Yeah, Paul makes a good point. Unemployment and inflation, possible perfect storm. Pay attention to this inflation because this inflation is being caused by the government. It's being caused by the government. And they are not going to stop printing money to prop up the economy, prop up the stock market, and this inflation is going to be bad. It's getting worse. People are ignoring it. And yeah. Yeah, I don't know. It's almost as if you know, people are just tunnel visioned. As they don't really understand how this money printing is affecting the economy, and when it all goes pop, and it will all go pop at some point. Yeah, who knows? The stock market will probably not be in a good spot. The government, yeah. Somebody sent me an email and said, what do I think about the government's monetary policy? And I think it's the same for the US and the UK. And this is what I told him.
Let's give him a big, fat, duh.
That's what I think. Steve said, do you like cash in the bank or invest? I think cash in the bank is the absolute worst thing you could have right now. The way inflation is rising, your cash is becoming less valuable every year. I think you'd be better off in probably just buying things like silver than cash, gold. So I'm not a big precious metal fan, but I'd diversify it between, put some in silver, gold, Bitcoin, and then look for opportunities in the stock market. But cash is just going to kill you over the long run, especially if inflation keeps on going up, which it will. It's going to get worse, inflation. I wouldn't hold any more in cash than I needed to pay probably 6 months of my bills. Mike says, should have bought Robinhood an IPO. Yeah. Isn't it down today? I don't know. Let's see what the Robinhood. Ooh, Robinhood. What are we, down 22% today with the IPO? Yeah, if you got in down here at 30, I think it got released at 28. Came on the market at 34. Had a huge run up to 65, then to 70. And then you saw probably a lot of people bought in here at when it was between 55 and 65, and now we're at 54. So pretty big one-day drop, 22%. And then AMC, of course, is the other stock that everybody is raging, up 12% today. I almost bought some when it was down here, 29. Didn't have the guts because I don't believe in the company long term. This is just all, Wall Street bets investors holding it. And once they decide to not hold it anymore, of course, then you got GME as the other stock that they seem to be big on. Big short squeeze up 4% today, down 6.63%. So, yeah, I mean, those are very risky plays. If you're going to have a little bit of fun money in them for a gamble, you can. How does your favorite tracker compare with your trading 212 investments? My trackers are getting absolutely beat by this trading trading 212 is much, yeah, it's doing much better. A lot better, of course. I mean, we're in a bull market. I think I picked out some pretty lucky stocks, but if I had put more into these ones that are in the red, like Microvision, Centrus, Tullo, and didn't get lucky with the Lloyds and the Laredo. I mean, Laredo is really what's shot this portfolio up a lot. And then Tesla at the beginning. So, just lucky timing. I would, with any significant amount of money, would not do this type of trade. Would not buy these types of individual stocks. It's always been a percentage, of whatever percent. I think maybe 15% is okay to try this kind of trade, but be prepared in a bear market. You're actually going to get killed with these stocks versus a tracker, which will not take as big as a hit as some of these stocks would. So, but right now, the Trading 212 has definitely outperformed the index tracker for sure. Curious, did anyone invest with prop land since the interview, Lawrence? Did I? I did not, because I don't have enough capital that I'm willing to put into prop land at the moment, because they have a £1,000 per share per loan minimum. For me, they would be right there under Blend Network. If I had extra cash, it would go into Blend and prop land probably. Bitcoin profit, would not invest in it. It's software trading. No. You could lose a lot of money. Anything else? Chris said, anyone know anything about Fourth Way removing LendingCrowd from their reporting? I mean, it's just because Fourth Way relies on a lot of data being provided by these peer-to-peer lending companies, and LendingCrowd did not provide it. What I think is going on, I've talked to the CEO of LendingCrowd a couple of times. I think his name's Stuart. Seems like a decent guy, but they're just focused on CBILS lending, and I don't think they really care too much about retail peer-to-peer anymore. So providing all of this information so Fourth Way can write a review about them is very time-consuming, and LendingCrowd probably just doesn't want to deal with it. But I've never invested much money through LendingCrowd. I did a little bit when I first started peer-to-peer lending, but I had some defaults, and I just didn't feel like it was for me. Luke said, you moved over to crypto to remember you mainly being focused on peer-to-peer lending and ETFs a couple of years back. Yeah, I did. I always look at new investing spaces when they come in, and as I learn more about macroeconomics, when I first started investing in cryptocurrency in 2017, I didn't really know what it was. I bought into the hype when the price was gone up to 17,000, bought in at completely the wrong time. But as I learned more about it in 2019, I really started to understand, the effects of money printing and what's going on, and how we really need to have some kind of a decentralized asset class, which we do with Bitcoin. I became very interested in it and start focusing somewhat on that. Paul said, I bought AMC at $8, should have sold when it went to 60. Yeah, if only you knew, right? If only you knew to sell out at the top. You have to have one of these crystal balls, so it can tell you when to sell. Mine never works. I just don't see anything through it. It doesn't tell me anything. Mike says it's demand side inflation, demand for materials post lockdown is the issue. I mean, look, I pay high attention to the US, and it's definitely more than that. The problem is that the Fed in America is issuing debt, they're printing money, and then they're buying it on the backside, and that's one of the big problems. You know, and that's going to have that domino effect on world economies when that thing all just implodes. You know that the Fed has a trading desk where they can just buy securities right from inside the Fed, treasury securities, bonds, and things like that. It's crazy. $120 billion a month they are spending on buying U.S. treasuries and mortgage-backed securities. So you're talking over $1 trillion a year, printing and then rebuying. It's ridiculous. You know, there's definitely more than just demand side inflation. Of course, yes, materials have gone up a lot, but the root of the problem is government printing for sure. Anyway, I think that's going to wrap it up this week. Went through a lot today. Again, please hit that thumbs up before you go if you can. And should have that cryptocurrency guide on the website, hopefully by the end of the weekend, just finishing up. But thanks again for everybody who joined the stream. It's really good to see you, and love you guys a lot. Hope you have a safe weekend. Stay away from that nasty COVID. Hopefully nobody has had it, and we'll see you next week, Thursday, same time, 7:30 p.m. UK time. All being well, have a wonderful weekend. Enjoy yourselves, and I will see you next week. Take care. Bye.